We provide property investments to investors such as yourselves, wholesale investors, mainly through the sophisticated investor class. And basically, we've got two lines of investment. One is our Natgen Investment Trust, which are longer term 5 to 6 year trusts, which we invest in existing assets and basically provide secure, long-term, regular monthly income to unit holders, with the intention of holding a property for a 5 to 6 year term and then selling it on and realizing the capital thereafter. Our second area is our development trust business, where we actually buy a site, a development site, and go through the whole development process. The unit holders in the trust effectively stand in the shoes of the developer, and Natgen, we provide the development management services and look after the construction through to sale, or in some cases for the longer development trust for the operation of the asset following that time. And then the third thing that we're coming up to is our Natgen Deposit Fund, which is going to be basically a liquid cash style product where you can put your money in and withdraw it on a monthly basis, and we'll be looking to provide better than bank interest on that in a capital stable sort of format, and that'll be coming in early 2025. So from here on in, I think the webinar is really about helping you to get to know who we are and Natgen, specifically with regard to the SP24 Trust. Each of you have had a copy of the information memorandum, and we assume that you've had a good look at that. So we just want to give you a bit more of a feel of who we are, how we do things, and what you can expect from us in this or any other Natgen investment offer, as either in the past or in the future. So with that, I'll hand over to Peter to continue what we're talking about now. Thank you very much.
Thanks, Stephen. Good evening, everybody. In light of the fact that we've got some new people as well as existing investors, our existing investors are probably au fait with how beneficial property is in an investment portfolio. But I thought we might just quickly run through for our new investors some key concepts. So when you're actually looking at a property investment, there are three types of returns that you get from property, and that's the cash income returns. There's a taxation benefit to property where income actually sort of converts into capital, and we'll sort of talk through that very briefly. And the final piece is the fact that you've got the potential for capital gain in the future when you liquidate the property or the investment. So if we looked at most people, when they're looking for income, revert to things like cash and deposits or mortgage funds or property. And there's actually sort of, if you looked at something like cash and deposits, that they sort of yield usually a bit lower, and let's call it 5%, and then mortgage funds might be around about the 8% mark, and the Natgen property trusts, we tend to target 8 to 9% monthly income for our investors. And I guess what we're trying to show here is that with those three different types of investments, the sort of orange bar shows you what the annual income would be after tax, and then the return after, if you held that particular investment with those assumptions over a 5-year period. The blue line sort of shows you what that looks like. And sorry, this is actually assuming that the property trust actually has 100% tax deferrability. So it's not until year 5 that you actually look at paying tax with property when you actually sell the asset in year 5. and again, there's a little bit of capital gain in the mix as well. So that's another sort of benefit to investing in property. The other considerations is we're not really comparing apples with apples when we're talking about those three different types of asset classes, because as we know, term deposits attract a government guarantee up to $250,000. So that, they're quite a safer type of asset. I mean, you're pretty much buying government debt. But the point is they're a different return. So I like to say that this is like comparing apples with pears and oranges. The mortgage funds are actually secured by property as well. So that's sort of part of that. But it depends, as we know, as we've seen historically, it's how mortgages are written. So what sort of process is gone through, what the location of those assets are, and so forth. It makes every unique mortgage different. When you're looking at the Natgen property trusts, you know exactly what you're looking at. So for instance, today you'd be looking at SP24, and you would know that's the asset that we're talking about. So it's quite kind of clear with that. Now, in terms of inflation, we've all seen inflation over the last couple of years. That actually can erode your wealth because you need to actually invest above the inflation rate to keep your money growing. So, for instance, in our 5-year example with the numbers we were using before, you can actually see in the green bar at the bottom there what the actual after inflation return would be on your money. So again, property comes up trumps because you've got that kind of capital appreciation at your disposal there as another sort of option for return.
Sorry, Peter, can I just butt in there for a minute? Just one thing also to be aware of in terms of that third level of return, which is capital appreciation. We're always pretty careful to not make any assumptions about that and to suggest what capital appreciation is likely to come from our assets, because the fact is we simply don't know, and neither does anyone else. There's plenty of people who do make assumptions and put that to investors about that sort of thing. So, but we sort of shy away from that because we don't actually know. So those assumptions affect the return forecast quite substantially. What we can say with some certainty is what the income yield on an annualized basis will be, and that's what we pay on the monthly income. And the second point I'd make about capital appreciation on property, and commercial property in particular, is it's very much linked to the income. So as the net income of a property rises, all other things being equal, the value of that property will also be rising. So that's what we focus on during the term of our investment trust, is ensuring that we're maximizing net profit from the property, and capital appreciation will necessarily flow from that. So sorry to interrupt. I just thought I'd mention that. Thanks, Pete.
Thanks, Stephen. So one of this is a chart that is produced by MSCI, and it gathers a lot of information from all the fund managers around Australia about their property valuations. It's predominantly about the big end of town. But what it shows you is that over the last 24, 25 years, what commercial property returns have been. And I'd like to just point you toward a couple of the colors there. So the yellow bars are actually the income that comes out of these particular assets. The green bars reflects kind of the capital component to the return. And you'll see that the green bars do go up and down. So there is a bit of a cycle, and that's typical with property. But what you will you'll notice that stands out quite in your face there is that the yellow is positive the whole way. So that's the income component at work doing exactly what Stephen said. In terms of what the long-term average has been over that period of time, again, you'll see there that at 9.6% per annum has been the average over that period of time. So that's what commercial property does, I think is probably the short of it.
Peter, can I just mention one other thing? Sorry, I keep
No,
butting
go
in
for
on
it.
you, but looking at those cycles there, which show sort of negative capital returns in property, particularly at the moment. One other thing about the MSCI indices is they're very heavily office weighted because of the nature of the assets from the high end of town. So if you each of these bars, by the way, is a quarter, a 3 month period. And if you look at sort of 2023, 24 with the negative returns, a lot of that will be CBD office, particularly, because in that same time, industrial property's been incredibly strong. So there's been no negative capital returns there. The sort of shopping centre retail market that we invest in quite a bit has also been strong. There's been no negative returns there. So this chart, whilst it's terrific for showing the consistency of income returns, it's probably right now a little bit misleading in terms of returns from all different types of property because of the heavy weighting on CBD office in here.
Mm-hmm. Thanks, Stephen. In terms of what we look for, our team puts a lot of rigor into what we do. We don't just, as Stephen, I'll quote you, Stephen, as you like to say, if just because a mountain's there doesn't mean you have to go and climb it. Oh, actually, I've probably stuffed that up, haven't I? But but anyway, the point is, just because an asset's there doesn't mean we have to buy it. And we really do look for mispriced assets that are in resilient sectors or have good rental reversion. And we're seeing opportunity at the moment in the regional retail convenience sector, the non-capital city CBD office assets, the industrial assets that have rental reversion opportunities, but they've been a bit skinny at the moment, so we haven't been too successful with what we've been chasing there. There's been specialist assets. In terms of the specialist assets, an example of that is this SP24 asset that we're talking about tonight, the medical asset, and also the development opportunities that we see. So we really look for something that we're either buying at below replacement cost or has really good sort of that sort of increase in income built into those leases and resilient throughout economic climates. We'll just as we sort of said before at the introduction, most of you have had a chance to have a look at the information memorandum, probably spoken to Carolyn already, but we'll just quickly whiz through this, and I guess it'd be better if we sort of have questions. If you've got questions along the way, please pop it in the chat and we'll address that at the end or ongoing. So here we go. In terms of this particular asset, we know it's a medical facility. It's got really strong lease terms. It's well located. There's a very positive population dynamic, supply and demand, and there's the asset packaged up within the trust is targeting an 8% per annum paid monthly return for investors over a 5-year term. The points here are just quickly that we're raising 6.25 million of equity and we're funding it with 4.825 million of debt to make a total of an $11 million trust. We've just, well, I think we've almost signed on the dotted line, Stephen, with the banks. I think that's a job for tomorrow, but we have gone out to tender with the banks, and the major banks have come back. They've been very excited about this particular asset because of the quality of the asset.
Yeah, we've had offers from three of the big four banks, and we only went to three of the big four banks. We've had offers from each of them, and a couple of smaller banks as well, and also the margins that we're showing on that debt is indicative of the quality of the asset. So we're very happy with the outcome from that process.
So that's sort of the high level parts there. We've also sort of outlined in the IM the dynamics of, like, this sort of relates to the Gold Coast fundamentals in terms of more around the office market, but very low vacancy. And we're actually seeing both from the Property Council of Australia and one of the largest real estate agents that do leasing in the sector, all sort of saying that tenants are actually just renewing leases because it's just too hard to find new accommodation. So those kind of dynamics are very positive. We've covered quite a bit in the IM about medical properties, but if you look at, I think the main thing to look at about medical properties, assets that are linked to medical tenants, they're fulfilling a need for a growing population and an aging population, because obviously as we get older, we unfortunately get sick or need treatment to stay alive and keep moving. And that kind of actually means that this is a non-discretionary spend for people to get whatever medical treatment they need. In terms of Australian expenditure, Australian government expenditure, or how the sector is actually funded. If you look at that pie chart down the bottom, the sort of blue wedge on the left, the $70 billion, that's state governments. That's how much money they pour in each year. And the Australian government is the federal government, I should say, is the dark blue chunk down there. So around about 72% of medical expenditure in Australia is funded by government. And so that really makes this a very strong sector to be linked to, especially when you're looking for tenants. Oops. In terms of who the tenant is in this particular property, you would have seen that it's Icon, the Icon Group, and they provide in this particular tenancy immunotherapy and chemotherapy treatment to patients. This is just a couple of pictures of what the fit out looks like inside, and you'll see the sort of treatment beds there where they deliver the chemotherapy infusions to patients.
Peter, if I could just cut in there a little bit. Sure. Again. For those of you who aren't familiar with Natgen, what you'll find is that we always put out early what we're looking for and why we're looking for it, what sort of areas we're into. And I've probably come a little bit late to the idea of medical property being part of our core remit. But so for the last 2 or 3 years, you would have seen us talking about regional convenience retail and non-CBD office and that sort of thing. So the specialist investments, of which most of that is actually medical, has really only come into our vernacular in perhaps the last 12 months or so. And that's really just my recognition as the major person in terms of acquisitions of the value of that market. And those two previous slides, which show why medical and why the demographics are so strong, are probably the things that have brought me to that. So just the fact that if you look on for cancer in particular on the following page, either happily or sadly, depending on which side of age 45 you are on, 92% of cancers are diagnosed after the age of 45. So it's very much a diagnosis and treatment which is skewed to the later half of life. And the other stat which I was shocked about is that the population of over 65s in Australia is due to double in the next 22 or something years, over the next couple of decades. So you put those two things together, and the same incidence, the incidence of cancer diagnosis is very similar to a lot of other chronic diseases. As we age, they're more likely to be diagnosed. So the necessity for treatment of chronic disease is going to absolutely explode in this country over the next 20 to 25 years. So on that basis, we will certainly be keeping medical style assets on our watch list for the future, as well as for SP24. So what the corollary of that is, as you watch us going forward with what we do, I'm hoping you'll never find that we produce something for you that you're not expecting, because as Peter alluded to before, my little analogy is when George Mallory was asked in the early part of the 20th century why he climbed mountains, and he said because it was there. That's not the reason we do property. We do property because of a long-term understanding of what we're doing and where we're going, and seeking long-term value for our unit holders. So if we ever produce something different, and I don't have a good answer to the question, well, why are we doing that? Then you'll know that I've swallowed the George Mallory thing. But anyway, that gives you a bit of a background of how and why we look for things. It's a long-term process. It takes us years to decide what's on this list or what's on our watch list, and often years to purchase things. It's not uncommon for us to be watching and poking around an asset for 12 to 18 months before we actually either make an offer or have an offer accepted. So sorry that I interrupted again, Peter, but there you go. That's just something I thought
think I'm
might be
toward the
interesting.
end of my little bit. So
Are we nearly finished
Okay.
on SP24? We just had a question come in which we could answer
sure.
now, obviously, while we're still in SP24. Just obviously, we announced this afternoon that SP24 is oversubscribed. Will there be proportionate refunding of subscriptions to unit holders? At this stage, we're hoping not, I guess you could say, but I think everyone on the call now has applied, and it looks like you will be allocated your units. For other people, they would simply be put on a waiting list at the moment. So we'll certainly communicate, if I've got this right, Stephen, in the next sort of 24 to 48 hours if people do need to be paired back, but we are certainly working for that not to be the case.
Our intention is to close as soon as we can with these things, to ensure that we're not giving too much money back. I know myself in that situation, it's annoying to get, fractions of your money back. So I think I don't think that'll be necessary in this case.
Excellent. Thank you. Over to you, Peter.
There we go. Okay, no problem. So yeah, typically this is how to invest. And Cara, did you want to sort of talk about though how people can prepare for our next fund?
Sure. I think given everyone on the call is an investor, we've got one new one who's just been through the process, and hopefully that was fairly painless for you, Brett. Yes, obviously you need to request a copy of the information memorandum, read it in its entirety, speak to particularly your accountant, someone to ensure that the entity that you're choosing to invest in at that point in time or that year is the best option for your situation. And then we obviously collect the necessary paperwork, IDs and trust deeds and other things that we need to process your application.
Caroline, I wonder if there's seeing as SP24 is pretty much closed now. if it might be an opportunity just to mention what we're looking at going forwards. I've got a couple of things in mind. Probably that I'd like our next asset to be a shopping centre. We've developed a level of skills in shopping centre where we're looking for probably slightly different things than we were in the past. But I'm looking at a couple at the moment. One in particular, I've just come back from Western Australia over the weekend, looking at a centre over there, which has a strong tenancy mix, but also an opportunity for a little bit of repositioning of the centre over time. And I'm in negotiation with the current owner at the moment to work out how to undertake that repositioning with basically the previous owner paying for it. And then I've got another one in regional Queensland, which is also it's actually a centre I've been watching for 3 or 4 years, just waiting for an opportunity there too. So I see probably retail in our near future. But the other thing that I'm watching very carefully is the office market. It's been sold off very aggressively by a lot of the large fund managers in the country, and I think we're just getting to that stage where it's looking like it's been oversold. Certainly, you can buy office for well below replacement value at the moment, and I think it's going to be one of those things where too many lemmings ran off the cliff, and pretty soon they'll be stampeding back into it. So I think we've probably got about a 12 to 18 months time frame to pick some good office assets and cherry pick those for future. And that's what our QC24 fund earlier in the year was about, looking for properties that were office properties that were mispriced in the market and have really good fundamentals for going forward. So that's another place I'll still be looking. Industrial, I'd love to find some of that mispriced industrial, but it's a bit like hen's teeth. It's a well picked over part of the market, and it's also been very strong for a long time. So there's been not much to work on there, but all these things are cyclical. No doubt some industrial opportunities will be coming up. Industrial's been more of a happy hunting ground for us in terms of our developments, because we have 4 industrial developments under construction currently, and another one about to start, the Yarrabilba offer, which has recently been made. In fact, Yarrabilba, I was asked by one of our investors in Yarrabilba just earlier this afternoon. I think we closed that like 2 weeks ago, wasn't it, Caroline? Certainly wasn't long ago. We're just in the process of finishing off the detailed sort of optimization of the design, and that will be lodged shortly with the local authority for approval. It's zoned correctly, but we're just looking for the development approval there. So that's all going forward. So generally speaking, that sort of covers the market. But to the point of SP24, we're certainly looking for for future medical investments. And in fact, the Western Australian asset I've mentioned before, the shopping centre has a substantial medical centre as part of that too. And in fact, I see the future opportunity there to grow the medical centre further through the building which it's part of. So hopefully that gives you a little bit of a feeling for what's coming in the early part of 2025.
Excellent. Are we at the end of the presentation now, Peter?
We are. We just have a couple of the
Sure.
other assets in the portfolio, but
yeah, as I think everyone on the call knows, and Stephen spoke to at the beginning, we have our investment trust with the monthly income portion to them, and then we have our short-term and long-term development funds. And there's a lot of information on our website and articles and things, but obviously please reach out if you'd like more information on anything we've talked about tonight. I'll just check if anyone had any other questions, which it doesn't look like we do. So, did you have anything else to add, Peter?
No, I think one of the ones we always seem to get asked when we do these things is, can my SMSF invest in the fund or in these funds? And they can. So
Yeah,
that's the short
absolutely.
answer.
Excellent. Oh, well, thank you everyone for attending tonight. It's a pleasure to have you. And as I said, please reach out to any of us if you've got any questions. Thanks for your
Thank
time.
you.
Thanks very much.
Thank you.